It's Mike Swanson, Wall Street Window. I want to talk with you in this video about the real estate market and the stock market. So, what you're looking at is the CME Group, Chicago Mercantile Exchange, and they uh, allow people to buy and sell futures contracts on housing. Now, um, what these are used for, I mean, people could use them to speculate, but more people that do use them to hedge their operations or whatever they may be doing in the real estate market. Maybe they own real estate, they're building real estate, whatever it is. They want to lock in current prices in case they decline. Uh, and what happens is the people who do that are very accurate with what they foresee in the future. And I found looking at what these futures are saying about future real estate prices to be the most accurate forecasting tool to figure out where real estate prices are going. Now, there's a lot of stories out there about a decline in real estate. Real estate prices are off roughly 6% in the biggest cities in the United States from where they were a couple months ago. I saw an article today saying that lumber prices have taken a big hit and are at levels not seen since 2020. Mortgages are going up, obviously, and dampening demand and making it harder or more expensive to buy or build real estate. And this is impacting the real estate market. That said, there's also people out there making dire predictions that this is like 2007 or 2008 and everything's going to crash and everyone's going to lose their homes. And that's not, I don't believe that. And these futures contracts do not suggest that's the case either. You see, when real estate prices fell in that bear market cycle, they fell starting in 2006, and they fell a lot. Some markets they fell over 40%. Now we've fallen 6% nationally, and the futures are projecting an overall 16% decline to play out. Call it a recession, whatever you slow down, whatever you want to call it. Now, that's a much smaller decline than what happened from 2006 to 2009. And there were declines of, it happened in the 92, 93, there was a decline. 87, 88, there's a decline. And so the pullbacks, declines happen. And real estate saw some of the biggest gains ever, just about, from 2020 till just a few months ago. But what I'm most interested in is when this projected decline is going to come to an end, because that should coincide with a bottom in a recessionary trough or slowdown in the overall economy. And the stock market, which isn't a bear market this year, started around New Year's. Stock market bear markets typically end 3 to 6 months before a recessionary trough. So I'm a stock market investor. That's why I'm following this, because I don't see any evidence. I know gurus are out there saying the market's a buy, it's going to go up, but I don't see any evidence of that myself. And I want to see signs of a bottom. And this can give me an idea of when to prepare, when it may, way ahead of time, when it's likely to come. So here we have the prices in monthly contracts. And when I look at that, they're showing the bottom in real estate prices now is projected to be sometime around November 2023 till February 2024, somewhere around that time period. Well, that's doing this in September 2022. That's like 14 months from now. So that's way out in the future. And this tells me this bear market in the stock market's not ending this year. It may not end in the first quarter. It may end in it may be until the summer. It's going to be quite some time. So when I see things like this, which I'm interested in buying, this is the RWR REIT ETF, and it owns a basket of real estate investment trusts. And I bought it after the market crashed in 2020, sold it a couple months ago, pays good dividends. Stocks inside of it pay even bigger dividends, a lot of them. I bought a lot of them, sold them, but I'm looking to buy back. But it's melting down. It's trading today at a new 52-week low, down over 1%, and it's probably not going to bottom this year if we, judging by what these real estate futures contracts say. And that's a lot, and it's useful to know that. And so that's what I'm in the mode of doing, looking at forecasting tools to help me identify in the future when things might level out. And then I'll be watching to see them actually start to level out. I completely ignore the gurus who say, buy now, buy now, buy now. They've been saying that for a year. Every week they say it. And almost every month the market's been going down. Yeah, it rallied in July and August. But if you bought and didn't get out, you're still losing money. So we need to use useful tools that have predictive power. And this is one that's real important to me. And because it's accurate in looking at what's happening in real estate. And we'll look at more and more of these type of tools as time goes by to help identify when things are bottoming for real, when things are turning around for real. I don't care what Kathy Wood says. I don't care what Jim Cramer says. I care what useful, reliable indicators say. And I know that's, I wish they were saying buy now, but they're not. It's not a popular message, but it is what's happening. Look, if you like this kind of analysis, hit like, so YouTube will know it's people want to hear stuff that's not just simply saying buy, buy, buy. Something more informative than that. More, and if you want to get my next video update, if you're new to my videos, hit the subscribe button on YouTube, hit the bell next to it, and YouTube will send you an alert as soon as the next video is up. And I'll be talking with you later.